Welcome back, everyone, to today's market recap. Today, I have something really funny to show, actually, and we'll get into today's trades. There were a couple good trades you could have taken, and a couple good trades I actually did take live on my live stream. But first, I want to show you this tweet from TJR. So, you're never going to guess who this is. That's me. And you probably know who TJR is. He's got like 300,000 subscribers on YouTube. He's one of the biggest traders out there. But anyway, I was talking about Cardano. I was responding to him tweeting about his predictions. And he straight up calls me a retard. So I guess we have beef now. I guess officially TJR and I have beef. Kind of. Not really, but it's hilarious. I mean, the thing about it is he likes Bitcoin, but like Cardano is literally everything Bitcoin is and better. So I'll never understand the logic there, but okay. Anyway, let's jump into the charts. So London, going into the morning, I saw we swept London's highs, and I measured out the standard deviations of this. It was very simple, actually, and the standard deviations projected right. The 4 to 4.5 projected right underneath Asia's lows, and when this happens, it's not a coincidence. That's the market showing you its hand. It's like the market is basically saying, hey, this is where we're drawing towards, and here you go, here's free money. So yeah, you measure out the standard deviations of the manipulation move after sweeping London, and it's like very obvious that we were drawing towards Asia's lows. So right when that happened, I went onto the lower time frame here, and you can see that we swept out these highs. So I'll mark that out with the X. We swept out those highs. And you'll also note that when we swept out those highs, we pushed into the 830 open, which acted as like a resistance level. And so anyway, you had a high, a low, a higher high, which swept out these highs. That's important for a breaker block, and then a lower low. So this is the breaker, the series of down close candles. So the high, low, higher high, which sweeps liquidity, lower low. When this overlaps with a fair value gap, that's a valid entry point for shorts. So you can see here, that's exactly what I did. I entered on that overlapping area with the fair value gap and the breaker block. And I had my stop loss up here, but you could have even had it right here, and you would have got a 4-to-1 restored trade. But I did take partials at these equal lows, and it was also important to note that this was the new day opening gap, and the market, a lot of the time, it'll come back to that new day opening gap as well. So I thought that was a really, really strong confluence as well, along with Asia's lows and these equal lows. And you can see the market just burned right through all of that. And then also it kept going down all the way to take out New York PM's lows. So yeah, it's crazy how having an understanding of drawn liquidity can transform your trades. Imagine if I kept going and I targeted this, and then honestly, like, yeah, that would have been absolutely nuts, but I did not do that. So you got to go for the low-hanging fruit. I mean, this is already a great trade, 4-to-1, so. But there was another trade that I took before that. It was a nice Dodgy style trade, and I will get to other people's trades as well. I'm not just going to talk about my trades. But we had this trade from Dodgy, and this was the exact same trade that I took. Somewhat. I took it on the 3-minute chart, but he took it on the 30-second. So when the 30-second closed above, he simply targeted this internal high. Now what I did is I basically did the same thing. Let me get rid of all this for now. I basically did the same thing because I saw this as all like low resistance liquidity, right? And I saw this as equal highs. So I gave this a shot. I said, okay, what I'll do is on this 3-minute close above, even though I honestly I hadn't measured out the standard deviations yet. Otherwise, I probably would have instantly known that we were going to be bearish. But I saw this 3-minute, this 3-candle formation, this instant inversion right here on the 3-minute. So I thought this was good. I entered this 3-minute IPG, and I simply just had my stop loss to break even and TP1 right here, or actually, yeah, that's what I did. And this was like a 1-to-1 risk reward trade. It actually did hit, which was pretty cool. And I had I had half here and then half was going to these equal highs. But in hindsight, this is one of those trades where I learned something. I learned something very important, and that is that when you have like a key level that overlaps right above, let me pull up the, hang on a sec. I don't know where the times went. Oh, here it is. Okay. So you can see that a big reason why we reacted the way we did off of this high here is because the 830 open was right above that, and it was acting as a resistance level. So right up to that 830 open, and then immediate dump. So if I realized that the 830 open was right above those highs right here, I would have instead taken off all at that high instead of holding more for the rest of this. So that's my lesson here, that when there's like a key level like that, especially if we're bearish, like I didn't even realize at the time we were bearish yet, and if I realized we're bearish, I probably would not have been thinking about longs. But we were delivering. The thing is, we were delivering from this fair value gap, so it wasn't bad, right? We were delivering from a fair value gap. We got a 3-minute inversion, stop loss to break even at this high. It was okay. It was good. It was good. It's just we were more bearish. Asia's lows were the draw. So next, let's take a look at some more trades. So yeah, you could have taken it on the same trade on the 30-second. Here you can see that from Dodgy. Once that closed above, you target these low resistance highs here, and he just went for a very, very small trade because he's bearish. And I wish I saw that I was bearish earlier, but I still made money on that trade. So on demo, I'm still trading on demo right now, full transparency. But anyway, then actually I thought this was interesting. We came back up and we pushed into the midnight open and then pushed into the 9:30 open, and these both acted as resistance levels. So this is something I'm really starting to notice, is that these key times, these 3 times I talked about, midnight, 8:30, and 9:30, really are like really good support and resistance. And same thing with the new day opening gap. So like new day opening gap, you push up, and this acted as resistance. And I do think that we are drawing towards previous day's low. So we'll see if that plays out. But yeah. Let's see. Who else had a trade? Oh, so as Carlos points out here, this was AMD. Manipulation was obviously sweeping London's highs, like I talked about. But it's interesting because if you pull up the stat map, and I just barely made a video about stat map, so if you have no idea what I'm talking about, go watch it. Stat map is awesome. It's one of the coolest things. But anyway, if I turn on the stat map for both the daily and the 6-hour, so basically what it does, I'll explain what it is real quickly, is it basically takes in statistical data of like every single candle that's ever formed, and it tells you the expected manipulation and the expected distribution for a bearish candle, and the expected manipulation and the expected distribution for a bullish candle. So I actually need to do this on NQ because it's based off of NQ. I don't think it matters, but you want to check both, and the guy who created it uses NQ, so I'm just going to use what he uses. And so anyway, 6 hours one day, have both of those marked out, and so when I turn this on, you can see that, let me see what's going on here. Oh, I guess a new, it's using a different candle now. So we'll just do the day, the one day. anyway, you can see that, sorry, there's just a lot going on my screen. So you see we hit this daily manipulation level, and then we're distributing towards this daily distribution level. So really fascinating stuff. And as well, you'll note that if you take the standard deviations of this move, so from the low to the high here, the 2 to 2.5 lines up at previous day's low. So I do think that that's where the market is drawing right now. And you can see that, yeah, this. So basically, the 6-hour one was the same thing, but it was a little more accurate, and the distribution level on the 6-hour candle was right in between the 2.5 and 2 to 2.5. But since a new 6-hour candle started, it's not there anymore. But yeah, the distribution level on that one was right here, and yeah, stat map is super fascinating. Definitely watch that video on it that I made. But let's see. We had one other trade, F3 trades. He posted this trade. He said took this A setup on the 3-minute time frame. Price consolidated after I went in, trailed my stop loss, and on the lower time frame got stopped out. The fair value gap to the left was still holding price. So if I look at this, something I'm immediately thinking is, like, yeah, there's low resistance liquidity all the way up here, but in the short term, this is kind of like a giant fair value gap, and he's right. Like, so this could have worked, but your best bet is when the low resistance liquidity is like the low hanging fruit. Like, if this was the low resistance liquidity, I think this would have been a little better. But we're gonna take a look at this trade, and what time was that? 11. Okay, 11 o'clock. So this was on the, what time frame? 3-minute? Okay. So we got this close above, and it is nice. We're delivering from this fair value gap. But honestly, I just think I think he had the bias wrong too, because I think if he knew that like, for instance, like the 2 to 2.5 lies perfectly below previous day's low, like, you wouldn't want to be longing when market's drawing down here. So that's something else to know. But anyway, yeah, we were within this fair value gap, this higher time frame fair value gap. So this is a good inverse fair value gap setup because we're delivering from a fair value gap. We got to close above, right? This closed above, but the LR you're targeting is all the way up here. It's like really far away. And then, like, I don't know, previous day's low is kind of like sticking out. It seems like that's where the market's trying to go, especially when you measure this out. So I just think it was an okay trade with the wrong bias. And you know what? Sometimes that happens, but that's why we journal and we get better. With that, I hope you enjoyed this market recap. I will see you guys in the next one. Bye.